Welcome back. Today's episode is specifically addressed to family offices, single-family offices, multifamily offices, and the principles of high net worth family wealth organizations. Because I believe family offices are, in many ways, the ideal investor for this opportunity. Not the only investor. Institutional LPs absolutely belong in this conversation too. But family offices have the structural characteristics that make them uniquely well-positioned to capture the full value of aviation infrastructure, and I want to explain why. Let's start with the most important structural advantage, flexibility. Institutional investors, pension funds, university endowments, sovereign wealth funds, are constrained by investment policy statements, board governance requirements, minimum check sizes, and often mandate limitations that prevent them from accessing smaller, more specialized fund vehicles. A fund targeting $75 to $150 million in commitments is often below the minimum ticket size for a major pension. Family offices don't have those constraints. They can write a check of $5 million or $25 million into a fund that's the right size for this strategy. And they can make that decision based on conviction rather than committee consensus. That flexibility is extraordinarily valuable in emerging asset class investing. Second advantage, time horizon. Family offices manage multi-generational wealth. Their investment mandate is often explicitly long-term, preserving and growing capital across decades, not quarters. Aviation infrastructure funds have investment horizons of 7 to 10 years. For most institutional investors, that's at the outer edge of their comfort zone for illiquid investments. For a family office managing a portfolio meant to last for generations, a 7 to 10-year hold is entirely consistent with the broader mandate. In fact, the illiquidity premium that aviation infrastructure offers, the additional return available precisely because the asset class requires patient capital, is something family offices are uniquely positioned to capture. Third advantage, the principal connection. I've talked to a lot of family office principals about aviation infrastructure, and one of the most consistent observations I hear is that this thesis feels real to them in a very direct way. Many of them own or regularly use private aircraft. They've sat on hangar waitlists. They've paid the escalating FBO fees we've discussed. They've experienced firsthand the operational frustration of a corporate aviation ecosystem that can't accommodate their needs. That direct experience is not just an emotional connection, it's due diligence. When a family office principal has personally experienced the shortage we're describing, they don't need to be convinced that the demand is real. They know it is. The return profile aligns particularly well with the family office mandate. Current income from base hangar rents provides the cash flow that supports distributions without requiring asset sales. Inflation protection through CPI escalators and supply-demand-driven rent growth preserves the real purchasing power of the capital over the investment horizon. And capital appreciation at exit delivers the wealth compounding growth that multi-generational wealth management requires. You're not choosing between income and growth, you're getting both from the same asset class in a structure that a family office can size appropriately within their broader alternatives book. Finally, and perhaps the most importantly for the family offices that pride themselves on being ahead of institutional consensus, the first mover window is real and it's closing. The family offices that recognized private credit as an opportunity in 2010, before it became a multi-trillion-dollar institutional asset class, generated exceptional returns. The family offices that got into industrial real estate and data center infrastructure before the large REITs flooded those markets generated exceptional returns. Aviation infrastructure appears to be at an analogous point in its institutional adoption curve. The thesis is validated. The data supports it. The institutional buyers for the eventual exit are already active in the market. The entry window is open now, but it's not infinite. The family offices sitting at this table early are the ones who will capture the full arc of the opportunity.